Hey, what's going on, team? It's Ricky with Tactical Solutions. I read this pretty interesting article, and it's probably why you clicked on this video, and it talks about how millennial or dumb young investors have caused the market to, pretty much set pace to not see a return for the next 10 years. And you guys can kind of Google search the article if you guys want to learn a little bit more about it. I'm going to talk about it in this video, but what I wanted to first talk about is what I was trading today. So the overall market is, as of right now, doing a lot of consolidation right around the SMA line. I trade TQs and SQs. There's specific triple leverage ETFs that trade according to the overall NASDAQ future. Not something that I'd recommend for everyone, as again, they are triple leverage, not something that you want to hold overnight. But with the idea that because the market began to aggressively sell off, it made it a little bit easier, right, to make money off of SQs. And then once we began to see a market recovery, we were able to do pretty well on TQs on riding that up as the overall market went up. So pretty happy with how the day has played out, as I don't normally perform the best on Fridays. But without further ado, I have a couple kind of just like bullet points that I wanted to talk about. And I do agree with certain things that were said within this article. I wanted to get your guys' input on what you think about the article and certain points that were made. So pretty much this hedge fund manager that as of 2019 managed a little bit over 1.3 or a little bit under $1.3 billion. As of 2020, it fell under $1 billion. So he's lost about $300 million, but being completely open about it, a lot of hedge fund managers have, just because of the overall market condition, right? It's called Smead Value Fund, or if I'm not mistaken, and he went into the idea of this is an example of stock market failure at the hands of inexperienced millennials who have gotten lured into taking oversized positions in equities for the first time of their lives. One of the things that I really want to focus on right here of what he said is taking oversized risks in equities. I do agree. We do have to agree with the idea that when someone is getting started, they do tend to obsess about the idea of making money and not focus enough about how to actually trade. So as you guys know, I personally don't trade options myself. And on top of that, I don't trade with money that I don't have in my actual trading account. I don't like to use leverage, especially for someone that's just getting started. We try to talk about it all the time of why trade as you're learning how to trade with borrowed funds. It's just kind of the recipe for disaster, in my opinion. And you guys can agree or disagree, but there's a very kind of like notorious trend right now where people will trade options, go from zero to 100,000, then from 100,000 to zero, and pretty much give everything back. And it kind of just exposes the idea of how risky options can be. People love to ask why I personally don't trade it, and I trade with enough money that I feel both effective, yet not so much where I feel emotional. And I don't like trading options because of the high risk, high reward mentality. And I feel like with the dollar amount that I'm trading with, the ETFs, I'm doing just fine with how it is that I'm trading them, and there's no reason to overcomplicate it. So if you have or can tolerate a much greater form of risk, then great. Learn a little bit more about it, but understand the risk that it comes with the idea that, yes, a lot of people, as they're just getting started, begin to obsess about the idea of making money. And because these series of brokerages are able to heavily leverage your account, right? You're able to trade with a lot more than you might actually have, which can be a recipe for a disaster. So I do agree with that first point. But something I don't necessarily agree with is that they prefer you to invest in certain bonds or something like that in comparison to overvalued stocks. And again, the idea of something being overvalued is based off of someone's opinion. And at the end of the day, based off of looking into Smead Value Fund, there's a lot of opinions that they've shared before that have not gone according to plan, just like anybody, right? Even for someone that manages a $1 billion hedge fund like Smead Value Fund. There's nothing wrong with making mistakes, but making sure that you don't put yourself in an unfortunate situation in which you lose more money than you can tolerate yourself, right? So one of the things that I also do want to highlight is because of how heavily people are now trading options, there was a $500 billion bullish call option within a 4-week stretch by small retail traders in comparison to 1999 when it was 100 billion and 07 when there was 100 billion. This doesn't surprise me. If anything, I thought it would actually be more, just because of how accessible the market is. Literally, because of Robinhood, Webull, all these free trading platforms, even the big trading platforms now offer zero commission. This is only encouraging more people to explore the option of trading in the stock market for themselves or learning more about it. On top of that, more now than ever before, saving accounts are almost a joke because of how little the return is per year in comparison, where people would rather than take initiative and do it themselves. And the last comment that I want to highlight is that there's a 0% chance of producing wealth for someone over the next 10 years that will meet their needs. And pretty much I think this stems from the idea of, a lot of these tech stocks that a lot of millennials are really obsessing about, right? Tesla's a perfect example, Microsoft, Facebook, regardless, they talk about the idea of a tech bubble. And let's be honest, right? The tech industry is very overvalued, but this idea is that they continue to buy, especially call options, right? Bullish call options on overvalued tech stocks, which just continues that momentum in that rally. And although I do agree that the market has become very overvalued, there is no question. We can see this on the 180-day chart, not only for /NQ, but with Microsoft itself. And he gave a series of examples of how it's performing now based off of the past year. And then on top of that, because it grew so much within a very short period of time, that it became so top heavy that within the next 10 years, it's going to be very difficult to be able to see a consistent return or any alone. And I wanted to ask for your guys' opinion on what you think about that comment, that the market is now so overbought that now for long-term investors for the next 10 years that we can't expect a return. The reason that I wanted to highlight this, and that was the last point that I wanted to highlight, is that almost kind of like sounds like an excuse, right? An excuse of like, all right, well, for the next 10 years, don't really expect a return because of the idea of these millennial investors and using them as a scapegoat. When it comes down to it, even when something is overbought, right? We've talked about this multiple times. There's no reason to overcomplicate it, especially if you're a trader and not necessarily investing in a stock market. When something is overvalued, regardless of how overbought it is, and it continues that momentum, I feel like it's more of a disservice to not continue to take advantage of an opportunity when it's clearly presented to you, versus just because something is overbought and because it's overvalued on the fundamental side, that I just hold back, sit on my hands, and hand my money over to hedge fund managers. I do agree that it is super, super important to understand on the fundamental side and how to properly execute long-term plays, with the idea that when we see momentum, when we see rallies, and when we see the market booming, as traders, it is our job to take advantage of these opportunities. Does that mean that you should take advantage of these opportunities with excessive bullish call options? No, not necessarily, and especially not aggressively leveraging your account, because when something is overvalued, if you guys have ever watched any of my videos, one of the things that I like to do is, even when something is overvalued but it's still very bullish, I will take a position that is small enough that if it does pull back, it doesn't devastate me, but effective enough that if it continues to uptrend, then I can appreciate that return. Does that make sense? Where if something is a little bit more on the oversold side, I might take a more aggressive position in the very beginning because it's not so overbought that it's bound to pull back very aggressively. But at the end of the day, I think one of the best things that we can all do collectively is not always just obsess so much about the profit potential and all the good things that can happen when taking a trade or when investing in something, but always have an open mind on, the idea that there are two sides to every trade and there are two sides to every investment opportunity. Taking into consideration that risk management is key, and that when you aggressively do leverage your account, you are putting yourself at risk and your future self. Just imagine this, right? Do something today that your future self can thank you for. When you're learning how to do something, are you being put on the line to try to make the most money possible? No. So why, when you're learning how to trade, are you trying to make it or break it? Just something to take into consideration. I wish people could focus so much more on understanding what it is that they're doing, versus, because the market is so accessible, putting your money somewhere and just hoping that it goes according to plan and not even taking the risk into consideration. Just my 2 cents. But I really do appreciate you guys' time. I hope that you guys learned something new in this video. Also, we do upload new videos every single day on YouTube, so don't forget to subscribe to the YouTube channel. And if you learned something new, I hope that we earned your thumbs up. And if you would like to connect with other like-minded individuals, just make sure you click the first link down below. This is for our free Facebook group. We have over 292,000 members. That is that first link down below. If you guys want to watch me trade live as soon as next week at Market Open, click the second link down below and learn a little bit more about our Learn Plan Profit group. Until then, I wish you guys nothing but the best. Continue working hard, continue following dreams, let your passion be what drives your success, and like always, let's make sure that we end the year on a green note. Take it easy, team.